let's just make sure we're on path back to 2%. If we are, I think decent growth in the economy, solid, unchanging steadiness or cooling mildly in the job market, rates can go down still a fair amount, but we have to have convincing evidence that we're on path back to 2% inflation.
So what does the Fed really need to figure out if they're going to cut rates or not? Well, that's what we're going to talk about in today's video, folks, because this is the Chicago Fed president. He's going to kind of take a deep dive into the employment numbers and also the inflation numbers. If you're watching this video, you're trying to figure out what's going on with these things. They changed a little bit today. So I'm also going to explain to you guys how there's not just one mortgage rate out there when it comes to like 30-year fixed. Most of the rates you see online, they're advertisements. So I'm going to explain to you guys how these things kind of work over here. Because if you're a homeowner, maybe you're a home buyer, realtor, even loan officer, my goal today is to explain to you guys what in the heck affects these and why? So today we're going to talk about, well, we're going to let the Federal Reserve members talk. They're going to talk about the jobs report. He just went over some of the data with you. But then he's going to take a deep dive saying, okay, maybe the jobs numbers aren't so bad, but inflation, that's where it's sticky. And where is it the stickiest the most? Well, you're going to find out from him how healthcare is maybe at some point going to bankrupt their economy. So let's get over to this Fed official on what his thoughts are on the economy, employment, and the inflation numbers. And then I'm going to show you guys how mortgage rates work, and then all the economic news behind them, and what I think is going to happen in the next few days, next few weeks, and even months ahead. So let's get back to Goldsby.
So really what you're talking about, Austin, sounds to me like a debate about timing. You think we ought to get there, which is lower rates, but the speed with which you get there is the one that you seem to be arguing with. Do you see rates lower at the end of this year than they are right now?
I do, but it's a little more than just timing. We must get convincing evidence, as I say, that prices and inflation is going back to 2%. And even in the latest CPI and PPI numbers, there's some that is encouraging, but there's some that are still warnings. So the best thing about the recent inflation numbers we got are that the impact of tariffs on inflation, maybe it's easing as we want it to, that would just prove to be transitory and goods inflation would go back down to where it was before this started. The disturbing part was if you look at non-housing services, that inflation is not yet under control. And we've had some discouraging signs, healthcare inflation and others that I don't need to tell everybody. People can look for themselves and see that the price of these services, when you got inflation in that running over 4% at an annualized rate, you still got some work to do.
So that is officially from the president of the Federal Reserve in Chicago. So he's thinking, okay, the employment numbers aren't so bad. You got to check out that full interview. And then he comes in and says inflation, that's the stickiest part. And the worst part about it, it's healthcare. Okay, so maybe today there's some healthcare things rumbling around with the Trump administration. But let's get over to now how rates are going to be based on this, because he's coming out saying, okay, well, maybe the economy's okay. Maybe we don't have to cut rates. So let's go over to rates and see what they did for today. So Mortgage News Daily, that's who I usually use each day. They're down today. Gives us a perfect example to come in and show to you guys. How do you look for rates and who's got the best rates out there? So the first thing is, if you're a homeowner right now, I got a tool for you. Go over to our website. It's called therateupdate.com right through here. And I created a tool up through there. And the reason why I created that is I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. So if you're trying to refinance, we're going to do all the heavy lifting for you. Put in your mortgage information in there. And what we're going to do is track it. When your rate goes down to 0.5% from where you are now, it'll alert you. If it goes down 1 full percent, it'll alert you. you. You can even tell it what interest rate you want, and it'll alert you and let you know that those rates are available. We don't sell the data, folks. I monitor it personally. But let's get over back here to those that are trying to figure out, how do you understand mortgage rates? So when you start tracking rates, you're going to get to all these websites, and they're going to be websites like this: NerdWallet, Bankrate. Well, most of these aren't even banks. They're actually advertisements. So you have to see, well, NerdWallet today has a rate at 5.88%. Well, Bankrate, 6.13. Mortgage News Daily, 6.04. Well, why wouldn't you just call NerdWallet? Because they're not even a bank. It's an advertisement. So these people probably have a 780 credit score, putting 20 or 30% down on their home. If that's you, that might be where your rate is. But if you really want to figure out what your rate's going to be, reach out to us. We'd love to help. But here's the things that actually make rates change on a daily basis. So here's what we monitor. We monitor the things that the Federal Reserve monitors and the markets, meaning the bond market. So what they look at is, they look at, like Goldsby said, they look at inflation and they look at the jobs numbers. Well, he came in and said, okay, jobs, even the reports that he has, isn't showing that jobs are crashing. But he's saying that inflation is just staying sticky. Well, let's recap what we saw today or this week in the news. So if you look at this week in a whole, we're going to get inflationary numbers. We're going to get the employment numbers. Let's wrap this up and just, you give me your thoughts down below. Where do you think these numbers are going to put us? So if you look at Tuesday, that's the biggest news day that we had this week. Was Tuesday, we got the CPI, consumer inflation. Okay, it showed inflation. Last reading was 2.7. Well, it stayed at 2.7. Month over month, it was last reading at 0.2. It actually went to 0.2, stayed steady. So basically on the inflation front, it's staying basically right where it is or coming down. You go to the producer side of the equation. This is where I think the January effect, what I call the January effect, which I mean in 2025, a lot of manufacturers and producers, they couldn't really raise their prices. Okay, you and I are struggling. Everybody's freaking out about tariffs and unemployment and all these other stuffs. So all these manufacturers and companies are just holding their prices, saying, okay, we're going to eat it in 2025, but in 2026, we're going to have to bring our prices back up to hit those margins that we're required to hit. So that's where you're probably going to see inflation ticking up just a little bit for maybe one or two readings. And then from there, I think it's going to cap out and just starting to topple from there. So the PPI came in a little inflated, which I was expecting. So that's what we saw on Wednesday. Now, Thursday, today, we had initial jobless claims and we got continued jobless claims. They actually look pretty good. If you look at initial jobless claims, it went from 200,000 previously to under 200,000. We haven't seen those numbers in years. Initial jobless claims also were below 2 million, which is a great number as well. So when you have all these numbers, you look at what the Federal Reserve's monitoring and they look at this stuff and say, okay, inflation, yeah, it's ticking up a little bit. We expect that. The tariffs isn't really crashing us. It's that healthcare stuff. Well, we're working on that. And then over here, when you could look at the unemployment numbers, this actually number went down recently. The unemployment rate was 4.6. Last reading came in at 4.4. So if you're looking at the employment numbers, why the Federal Reserve was cutting, it's getting a little bit better. You look at the inflation numbers, yeah, on the PPI it was a little bit hotter, but even Fed presidents coming in saying, I don't think that's going to really hurt us. It's that healthcare stuff that we really need to work on. So in these two, they're really not saying, okay, inflation's not coming down, but it's staying sticky, but it's not running out of control. So then you go over to see, okay, what's the Federal Reserve going to do in 2 weeks when they meet? Well, they're probably not going to do anything. If that's what you voted, because you're like, okay, the employment numbers are okay. The economy is running pretty good when you look at the GDP, and inflation, it didn't grow crazy like we thought with tariffs. So in 12 days, if I'm a Fed member, I'm actually doing nothing. I'm going to come in and say, well, just keep it the way it is. So 95% of them, yes, 95% chance the Federal Reserve's not going to do anything at this meeting, the next meeting, or the meeting after that. It's going to stay sticky. And then after that, what we're going to do is have a new Fed president and maybe one or two new members. And where it's going to go from there, let me give you my thoughts. So if you're out there and you're trying to figure out what you should do with mortgage rates, should you lock in? Should you refinance now? Well, if you have a mortgage rate right now of over 7%, please reach out to us. Put your information into our website or just visit us at the website, and I'll get to that in a second. But if you're looking to buy maybe in the spring or looking to build, should you be worried? I don't think you have to be anything worried about, because I don't think any of the data that's coming in is really going to affect things. And I know I sound like a broken record lately, but it's kind of nice finally to have a little bit of stability in the market. So you realize mortgage rates have been basically at this rate for about 6 months. So are you still paying that 7% interest rate or 7.5% or maybe even 8% interest? Please reach out to us. We'd love to help you. So don't trust these things. Make sure you trust a mortgage advisor like myself. So let me give it over and tell you a little bit about me and what I do here at the channel. So folks, my name is Dan Frio. I'm actually, yes, the host of the Rate Update, but I'm also a licensed mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. My slogan here is one application, one credit pool. We're going to compare your loan to over 30 different lenders. How? Why? Well, great question. How is I'm actually licensed in all 50 states from the bank that I work at. And the other reason, how do we compare your loan with over 30 lenders? Well, here's what we did. We went to the bank and we're like, hey, we need to be more competitive. So they're like, okay, let's do this. We're going to sign up lenders. Over 30 of them they signed up with. These are banks, credit unions, and just mortgage lenders. So if you want to work with us so we can do all the heavy lifting for you, one application, one credit pool, reach out to us. We'd love to help. Or you can go out there and put in your application and have 50 different places. What you're going to get is you're going to get mortgage options one at a time. You're not comparing them all at the same time. We're going to do that with over 30 lenders with one application and one credit pool. So now, folks, hopefully you understand a little bit more on the economic news that we got this week. Things aren't looking as dismal as a lot of people thought. We've seen the markets, well, the markets are staying pretty steady when you're looking at these things that the Federal Reserve looks at. If you go over to the equity markets, they're doing pretty darn well as well. So you go to the Dow Jones, the S&P, the NASDAQ, and the Russell, they're all up. I call this the Cinderella story. Let's continue on with this. The VIX is down, meaning the blood pressure on Wall Street is down as well. You go over to oil, oil is down as well. So let's push our luck. And one more. Is crypto going to help us out today? No. So we are, let's say, 4 out of 5. So I'll take that as a winning session. So I'm going to give this a double thumbs up for today. So the markets are looking pretty darn good. Mortgage rates aren't really moving at all. If they move at all, they're going to go up just a little bit, because how we follow this on the channel is we look right through here. This is the mortgage bond, how it's trading today. All you need to know is when you're looking at this thing over here, if the mortgage bond price, that's what you're seeing up through there, if it's going down, it means mortgage rates are going up. If this goes up, that means mortgage rates are going down. So down 12 ticks, and that's making mortgage rates go up just a little bit or stay steady. So nothing to worry about. If you're still looking to refinance, check it out now. But if you're looking to buy or looking to build, reach out to us as well, because I think rates are going to be steady. So how much do you really qualify when you're looking to buy that house? Reach out to us. We'd like to help you manage those numbers. So thanks for watching, guys. Can't thank you enough. If you haven't subscribed yet, please do so over there. Other than that, I'll be back here tomorrow at the opening bell to let you know how this mess starts yet another day. Thanks for watching. God bless. Have a fantastic evening. See you tomorrow. Bye-bye.